Guys, I hope you all are well. I'm going to make this a nice and short video today, and it's this cool example that I found of essentially liquidity that is manipulating and then liquidity that is distributing, and it just happens right in here. It's a great example of this. So first, we obviously have this push, this heavy bearish candle here, and I want you all to notice the difference between where these pushes in liquidity began. Okay, so if we were to draw in this area of accumulation, where essentially, remember, in accumulation, the market is picking up orders. It's picking up orders in here, and then you have people that are both interested in selling it, and they're placing a bunch of sell orders down here, and they're interested in buying it. They're placing a bunch of buy orders up here. Also remember that when people are shorting down here, their stop loss orders tend to be somewhere up in these sorts of areas, which a stop loss order off of a sell contract is a buy order. Market makers are looking to sell to these people who are buying their contracts, right? This is how they make the most profit. So this is the interesting difference between this candle and this candle, where both of these, we have a powerful push of liquidity. We have a lot of volume coming and pushing the market to a different price, but this one came from within the consolidation, right? Within the accumulation, and then it pushed down into the bottom of the range. This was a manipulation, my friends, because it came from within the range. The top of it was not yet breached, as you could say. So then with this liquidity swept, the market came up to the top and then sold off. And this was actually the distribution of the move. And if we look at this one here, it even gave us a nice fair value gap. So if you didn't enter on that, which that would have been a bit of a difficult entry to make anyways, look, they gave you another opportunity to pop in here and jump in on the short move. But this is a great example of when the market makers show their hand. When they show you what they're doing with liquidity, it was because of the fact that this pushed from the inside of the range rather than pushing from the outside of the range, that they showed us exactly what was in the box right here. So this is a great example of essentially manipulation and distribution of liquidity from within a range of accumulation. All right, guys, that's all for today. Like I said, nice and short. Hope that makes sense. This happens a lot, but this is just a great example of when this shows up. You can take trades off of this. It gives you a great opportunity to trade with the market makers, with the banks, and that's the best opportunity you have to be making profits in these markets. All right, guys, that's all. Take care. Happy trading.